Hi, everyone. This is Jason Barrack of Wall Street from Main Street. Welcome back to another Wall Street from Main Street podcast interview. Today's special guest is a returning guest. He is Chief Portfolio Strategist at Sprott Asset Management. He has over 40 years of experience in the financial industry managing money. John Embry, thank you for joining me again.
It's a distinct pleasure to chat with you again, Jason.
Now, John, I kind of want to go back to the 2008 financial crisis and talk about all the things, summarize all the things that have happened between then and now. So if I would have told you during the 2008 financial crisis that all the central bankers combined in the major economies would have put over $18 trillion worth of money and credit and asset purchases on their balance sheet, the general stock market would have went up over 250%. Some of the real estate markets would have acted like the 2008 financial crisis never happened, and the bond yields would have been driven down to negative. And yet gold and silver, here we are. Silver can't stay above 17, and gold is struggling to stay above 1,300 an ounce. What would have been your reaction if I would have told you all these things during the 2008 financial crisis, how, basically the gold and silver markets would have been stuck?
I would have said it would have been impossible. And it's interesting to ask that, Jason, because, everything changed in 2011. As you know, silver and gold had staged major recoveries after they got taken down in the 2008 paper markets for gold and silver. And then suddenly things changed. As you remember, silver almost touched 50 bucks, and then it had this violent reversal in the spring of 2011, and gold hit its all-time high of just under 1,900 in August, September of the same year, and then it basically reversed. And I've thought a lot about this, and I am convinced now that these guys, as a result of financial innovation, I call it, have more tools to work with in the paper markets, and they've been able to support the assets they want to support, bond stocks, and by extension, real estate, those that are sort of the canaries in the coal mine, which are gold and silver, and by doing it using derivatives, high-frequency trading, algorithms, etc., they've been able to stretch this out for infinitely longer than the rational mind would have thought 8 years ago.
I completely agree. And, there was the London Gold Pool, and I've read your interviews from other people that you were around during the London Gold Pool, which is, incredible that you could provide us with those insights. But it seems, the manipulation schemes have gotten even more sophisticated, especially with, these trading computers. There's not even human beings at the computer in a lot of these cases anymore.
Well, the thing that's a giveaway, and what I find so frustrating, because 99% of the population, most of them who don't know much about gold, silver, but even those that do know a fair amount, will not acknowledge what's transpiring. And all you have to do is look at the trading patterns. In the middle of the night, all of a sudden, gold and silver will plunge for no apparent reason. These are algorithms that are turned on at quiet periods, and they just drive the price down. And it's been going on, for certainly since 2011.
And JP Morgan's metal analyst, maybe he's a newbie out of business school, but he actually called the gold market a quiet market, a boring market recently. I guess he's not aware that his boss is, involved in a bullion bank and manipulation, and they've been fined by the CFTC for not reporting, accurate numbers and things like that.
Well, it's funny. I've heard that there's two operations at JP Morgan. There's sort of a legitimate one where the guys really don't know what's going on, and then there's the manipulative side where they do. I don't know. I put it this way. I worked for a bank once. I don't believe a word these people say.
Do you think that Wall Street in general, though, sentiment-wise, that they will always hit gold, even if the gold price is going up? They don't want to be bullish on it, maybe for a quick trade, but in general, they don't want to tell their clients to go buy gold?
I think in 99% of the instances, that's probably correct, Jason. But when gold and silver become the only game in town, and I believe that day is rapidly approaching, they too will become bullish because they have no alternative.
There's been a surprise rally in copper lately. I can't really find any bullish fundamentals pointing to why there's been a copper rally. So in your opinion, why do you think there's a copper rally, and do you think this is bullish for gold and silver?
Well, no, I think it's unrelated. As you know, often copper is referred to as Dr. Copper, and it reflects better things happening in the economy. And I think conceivably it may be manipulated up a bit in the paper markets for that reason. But there was also, as I'm involved with a company that's making an investment in a copper mine. And we've had all these presentations from consultants and what have you. And there's one consultant called Wood Mackenzie, and they came in with this fancy, spreadsheet about supply and demand and everything. And I don't think copper supply is growing particularly, but where they're making their mistake in their future prognostication is they're building in far too much demand. And I suspect if the world economy goes the direction I think it's ultimately going to go, and the demand for copper is going to fall off a cliff. So I just think this is a short-term phenomenon and has nothing to do with gold and silver.
I think also that the copper price could have been manipulated higher with like either a bear market rally or a short squeeze or something along those lines, a manipulation relief rally. And my rationale is the bullion banks and manipulators know that primary silver miners, especially with the latest earnings after Q2 2017, were not very good for primary silver miners. I think that they've hit a wall. I don't think that they can simultaneously maintain high production levels of silver and continue to cut costs. I think they have to choose now. But I think, they rallied copper hard because there's so much byproduct for gold and silver, especially for silver, that, if the copper price had stayed low or crashed further, then there was going to be a lot of annual silver supply that could have come offline if the copper miners had either shut down mines or went bankrupt. Whereas, now with this rallying copper, those copper mines are going to stay online and maybe even new copper mines are going to get built.
That's an excellent observation. I must admit I hadn't really thought of that, because I do know the primary silver producers are hitting a wall. And from what I've seen so far in 2017, silver production is starting to fall alarmingly in a number of constituencies. So that could be just another reason why they basically want to get the copper price up, to keep those mines that are where silver is a byproduct of copper and other base metals still operating at a high level.
Yeah, because when I look at new potential primary silver mines, John, I really don't see that many economic ones at the current silver price. I think there's the Mag Silver one in Mexico, but they're not a normal junior. They have Fresnillo as their partner. Most juniors will never have a JV partner like that. So almost all the other primary silver, maybe you research this more than I have, but I really don't see any new silver mines that can come online to replace mine reserves or keep production levels high that are below $25 to $30 an ounce silver. That's pretty much the threshold levels for a potential new silver mine.
Well, that you're absolutely right, because what people forget, they're always operating costs, which are fine if you're in production. But if you're trying to develop a new mine, I mean, there's capital costs, then there's administrative costs and what have you. And I think your numbers, say maybe as high as $30, might be sort of the median now for trying a new into production. And with the price trading at a fraction of that, it's not going to happen.
There's really only a handful of new primary gold mines that are either online now or even being built. And what's your opinion on the potential supply of new gold mines? Do you think the gold annual gold production is going to fall if the gold price doesn't rise?
I think it's going to fall even if it does rise, for the simple reason people forget the lead time that's needed for new mines. And the ones that are on the board right now to come on are relatively, with the odd exception, relatively small and will not come close to replacing the ones that are being depleted globally. And I mean, the price is going to have to rise and stay high for a long time in order to get any really large new production in. There's no better example of that than the period from 70 to 80, when the price rose from $35 to $8.50, and yet mine supply declined. And then eventually it caught up after that. But until then, it takes a long time to bring a new mine in. So there's nothing that's going to add to mine supply over the next 5 years. It's going to be lower.
That's interesting. I actually didn't know that the gold mining supply declined while the price rose in the 70s bull market. That's very, very interesting.
Well, First off, they don't believe it initially, and then when they do believe it, it takes a long time to get a new mine online.
Well, back then, John, I think like the average grades for a lot of gold mines were what, 30 grams per ton for a lot of gold mines. So now we're down to 1 or 2 grams per ton for most gold mines.
Well, no question. I mean, the low-hanging fruit has been long since plucked. It's going. I mean, there's only so much of it on the Earth's surface, and as you know, I mean, we're going further and further afield to find it. We're going into places that we'd never consider having a vacation.
Yes, and I think eventually, probably in the next 10 or 15 years, you know, the grades of the gold are going to get so bad, either with open pit mining or underground mining. The costs are going to be so high, and all the environmental regulations, all the other costs that go into there, that it's just going to be cheaper, like it was with oil 20 something years ago, to start mining gold off the ocean floor. So we haven't quite gotten there yet, but we're not that far away either.
No, we're not. And I mean, basically, I mean, the other side of the gold equation, aside from the supply-demand, I mean, very simply, as you well know, I mean, money is being debased globally at an alarming rate. So far, they've been able to sort of keep gold and silver controlled and tell everybody they have a responsible monetary policy, which they don't. But this is going to all explode. I mean, I don't think there's any middle ground left in gold and silver prices. This will go on longer than most of us can stand, but when it ends, if you're not in position, I think it's going to be very difficult to get in position because the prices are going to move so fast.
Yeah, in terms, Goldcorp has made some interesting investments that the rest of the market may not, or the retail investor may not fully understand. I know they just bought a large stake of over $300 million initial investment into a mining complex in Chile, but that complex isn't economic until $1,400 or $1,500 gold. So, you know, the average retail investor thinks, well, what are they doing? And the answer is, well, there are not a lot of gold mines that are economic at the current price. So they're trying to think, well, gold's going to get there eventually, and we need to find ways to replace our mined reserves and have long-term supply. So there is a lot of potential gold mines, you know, at 14 and 1500. That's what we're seeing a lot of the larger gold miners do, is lock up projects that can produce for long years at those prices.
Yeah, but I'll tell you one thing. By the time they get them into production, the costs aren't going to be 14 or 1500 because money's going to be debased so fast. The costs are going to go up appreciably. So, I mean, all of this underwrites, aside from any financial and economic disasters, which I think are inevitable, just the supply-demand side of the gold-silver equation guarantees materially higher prices.
I would agree with that. If the paper prices go lower, I did some videos on my channel last month about this, that if silver had gotten to $15 an ounce or went lower, the miners were going to start considering shutting down mines. So some of the higher cost miners...
I'm actually angry at the miners to some extent. I mean, they have just been bullied by the paper traders of gold and silver. None of them have come out and said, you're screwing my shareholders by, you know, driving these prices down and forcing me to produce at these levels. None of them say, virtually none of them, I shouldn't say all of them, virtually none of them say a word. And that angers me a bit.
Yeah, I completely agree. Only Keith Neumeyer has really come out and said it. I've spoken off the record with a few gold mining executives, and they admit that gold and silver are manipulated. But, you know, if you have a lot of debt with the bankers, or banks are on your board of directors, if you
can't offend your bankers.
Yes, yeah. Yes, they're too scared to speak out because, you know, they have a job and they need to put food on the table for their families, and they're worried about getting fired or losing their job or being replaced by someone who won't challenge the bankers. So if you have a lot of debt, you go to the banks, or if bankers are on your board of directors, I don't see a lot of gold and silver mining executives be willing to speak out then.
You're dead right, unfortunately.
Well, I want to ask you about sentiment among retail investors, since I know Sprott manages a lot of mutual fund money. Would you say then that sentiment among U.S. and Canadian retail investors for gold and silver and mining shares has basically collapsed then? Do you think this is the worst sentiment that you've ever seen in your career for gold and silver?
Well, if it isn't, it's darn close. And, I mean, it's reflected in the value of the mining shares, which, I mean, is low on economic as gold and silver prices are now. I don't think I've ever seen the shares cheaper in relation. And I say that, and I think that's reflective of the sentiment in the market, which is as bad as I've ever seen. And it's a classic case. Nobody looks at the fundamentals and says, hey, wait a minute, this can't continue. They are completely mesmerized by the terrible price action, and on the other side of the coin, the good price action in bond stocks and real estate. So, I mean, this thing has gotten stretched to extremes in both directions, and it's hugely affected sentiment in the gold and silver space. And that's actually bullish in the longer term, actually, but in the short term, it's really difficult.
Yeah, it's actually a contrarian indicator, like you said, long term, that, you know, this is extreme bearishness, as Sir John Templeton would say, is what puts a bottom in a market. But, you know, the other market, John, where I think a lot of retail money has left gold, silver, and mining shares for is Bitcoin, Ethereum, all these cryptocurrencies. So I know people, John, that have liquidated all their metals, literally everything they have, hundreds of thousands of dollars, if not more, all their mining shares, and they're chasing Bitcoin because, you know, Bitcoin doubled from under $2,000 in June, I believe, and it's over $4,000 now in only a couple months. So because of the price action in these things, I have a buddy who made who took $600 in initial coin offering and in 2 weeks turned it into $12,000.
Yep. No, I mean, that is certainly having an impact, Jason. And I mean, I think in the long run, cryptocurrencies are here to stay. What they're individually worth, I'm not prepared to say. When something goes up as fast as these things have gone up and there's such enthusiasm out, that's always made me nervous because it's the flip side of the sentiment we see in gold and silver. But I think at the same time, they're two separate entities because gold and silver, particularly physical gold and silver, I mean, it's forever. Whereas, I mean, you can have it in your own possession. You can store it in a safe place. I don't even say that to the same extent about cryptocurrency. So I don't have any problem with people having cryptocurrencies. But I think at the same time, you should have some gold and silver. And more importantly, I think people that are loaded up to the eyeballs in the stock market, or they really think they're safe in their bond positions, they're going to get annihilated before this is over.
I think it's dangerous for people to go all in on any one thing. I think it's in this environment where, you know, the central bankers can do a currency swap or change the rules on a bank bailout or do a bail-in or freeze people's accounts like they're talking about in Europe. It's dangerous to put all your money in Bitcoin or all your money in cash or all your money in gold and silver. So I think, you know, people out there should own some gold and silver, some mining shares, some Bitcoin. Maybe they can speculate on the other stuff. But if you have, you know, enormous profits in Bitcoin or some of these others, if you've made, you know, thousands of % return in a year in these things, I mean, expecting thousands of % returns going forward is kind of ridiculous. What I've been trying to tell people, and this is obviously not investing advice, just my opinion, but if you have profits and, you know, these things in that are highly speculative that keep going up, you should be taking money off the table each time it goes up. Maybe go and buy something like more gold and silver with your trading profits that is cheap and unloved now, you know, rotating out of assets.
I think the only cheap assets, really cheap assets on Earth today are gold and silver and their respective equities. I mean, most other things people are invested in are on the moon. Like I managed stocks for 40 years, and this is as expensive as I've ever seen them. The bond market is preposterous. Why anybody would lend money to somebody else at these rates is beyond my comprehension. And the low rates underwrite real estate prices, which have gotten out of control. Like I live in Toronto, and I mean the housing market here is absurd.
Exactly. Yeah, I went to your Sprott conference in 2014, and I remember the construction cranes then, and then I went back last year in 2016, and there was even more, you know, luxury condos and even more cranes. So it seems it's, you know, increased. It continues to defy reality. I live right outside of Washington, D.C., so things are crazy here too. There's like nonstop construction cranes and nonstop luxury condos being built here as well.
Well, you know, one reason that people really don't talk about it, but I mean, a lot of this is international money laundering. A lot of the stuff supporting this condo boom, which is out of control in Toronto, is foreign money coming in from third world countries where they're trying to escape from their own currencies. And they think we're safer and have more rule of law over here.
Yeah, I heard in Vancouver there's so many houses that are empty that were paid for all cash by mainland Chinese investors. There's entire, you know, housing developments of empty houses that they have like a 10% tax if the house is empty now. So there was a documentary about this earlier in the year, and now there's like a empty house tax or something in Vancouver.
Well, they actually have done that, but it's still, I mean, I don't think that's going to stop it. Like, I mean, Vancouver's a beautiful city, and what you say is true. There are a lot of empty homes that have been bought strictly as investments in a beautiful area.
I want to transition now to the demand side for physical gold and silver. You know, we talked about sentiment and for retail demand in the U.S. being very, very bad, but to counter that, the demand for physical gold and silver in China and India is still extremely strong. So do you think then that the paper markets are going to get broken? Because it seems like the physical demand from China and India for gold and silver, no matter how strong, has not broken the paper markets yet.
Not yet, but I mean, I have not a doubt in my mind that that's exactly what's going to happen. And I mean, it's going to impoverish us in the West, really, because those in the East have figured it out. And I mean, the gold that flows from West to East over the last number of years, and I think it's intensifying because of the lack of interest in the North America in particular. I'm told a lot of big money in Europe starting to get interested. So, yeah, I just think it's a matter of time, and we're going to be the last ones to the trough, and there may not be much left.
When you combine the private sector demand from mainland China with the demand for from the private sector in India, it's actually already, John, over 100% of the annual gold mining supply. So, I mean, where is the supply coming from then?
Well, I tell you, I think there's two ways. I mean, clearly they've been mobilizing central bank gold for years. And I think a lot of these ETFs that have been set up, they were set up specifically to sort of give them supplies of gold when they needed it in the short run. Because if you read the prospectuses for these things, you can drive a truck through them as to, you know, whether the gold's really there or not. So, yeah, I think that these guys are really good. I mean, the opposition is outstanding. They're bright, and they've got everything on the line, but they're going to lose. But they've been able to stretch it out for a long time.
Yeah, and I don't know if you read this with Jim Sinclair, but he talked about a quote. His price predictions for gold and silver over the years have obviously been way off, but he said a very prescient quote. He said that basically the retail investor would never make any money off the gold and silver bull market. He said the manipulators would knock the price down and keep it down, and the average guy would quit. And then the people who manipulate the price down would cover their shorts, go long, and they would be the ones who would make the profit off gold and silver and mining shares when the thing soared. And I think, you know, that's basically what has happened since the paper bear market of 2011, is that a lot of people who, you know, believed in the fundamentals of gold and silver, that it was manipulated, it was cheap. A lot of people, you know, admit all these things, but then they still give up anyway and have sold their positions off.
Well, it's still going on, Jason. I mean, I'm told from a number of sources that there's people giving up every day. I've known Jim Sinclair for many, many years, and I have the utmost respect for him. And I totally agree with what he said. I mean, these guys that are manipulating the price lower are going to be the ones that are long when this thing turns violently, and the people that have given up and gotten out won't be able to sort of get back on board. It'll be moving so fast.
Yeah, I think that's exactly what's going to happen. But I mean, the CFTC, honestly, they should have been sending a lot of people to jail. There's a lot of bankers and politicians that should be in jail in the United States that have violated the rule of law, committed felonies and fraud. I don't think I told you this before, but one of my buddies was actually at a regular investing conference where Gary Gensler was there speaking before he left as commissioner of the CFTC. And he was just giving a regular speech about high-frequency trading regulation, and then someone in the audience asked him about gold and silver manipulation, and he actually admitted this was after, you know, the regular CFTC investigation in silver had ended, right. And it said, you know, they didn't find anything. He actually admitted, yeah, gold and silver are heavily manipulated. He said, we just don't have the money or resources or manpower to stop it. So my buddy
Well, no, I call them on that. I think because I think the Western governments and central banks are behind it, and the CFTC is a creation of a government. They're not going to stop it.
Well, exactly. There's so many government regulators in many different industries who don't stop a lot of, you know, clear fraud. And then look at Bart Chilton, right? He was one of the few people in the CFTC.
He was one of the good guys.
Well, but did you see where he ended up? So he used to give public interviews, you know, bashing high frequency trading, right? Saying it was manipulating markets, and guess where he ended up recently? So
well, you know, he has to support his family, and he found out trying to be honest when he was on the CFTC wasn't really standing him in good stead.
Yeah, well, I think he has a law degree. I think he could have went and worked for another firm instead of lobbying for the high frequency trading community. So, he does have to feed his family, but I wish he would have found a different job. It just looks so bad.
Yeah.
It just, the optics of this. I'm just tired of people.
Go ahead.
I'm just tired of, people that in the government's being total hypocrites right in front of us. So.
Well, I mean, let's face it, since the financial crisis, I mean, there's been all sorts of stuff going on, and there have been banks and everybody are being fined tens of billions of dollars, but nobody goes to jail. Banks aren't doing these things. Individuals are doing them, but nobody's being punished for it. Think about that.
There's so much fraud. You remember Eric Holder sending out that memo, right, to the Department of Justice employees that, if there's clear bank fraud, that they can't prosecute it because it risks taking down the global financial system. I told you in 2014 when I met you, I had my source that was inside a high-level IMF meeting about, the phrase currency swaps was used hundreds of times in presentations. So I think, one of the reasons why there hasn't been another global financial crisis, despite all the, problems that there are with subprime auto, student loan debt, problems in, I think China now has even more non-performing loans than the U.S. did during the 2008 financial crisis. So the reason we haven't had this is I think there's a lot of swap lines and a lot of, covert bailouts already being done.
There's absolutely no question, and we could talk for hours about the Chinese financial situation. It's horrific. And the fact is, what they've been able to do because of all these, swaps and everything they brought to the table, they've just put infinitely more leverage into the system at a time the economy has no vitality whatsoever globally. And it's just a matter of time. And if the last one was bad and could have sunk the system, they still had some ammunition to fight it. This time when it goes, heaven help us.
Yeah, I think the elites, what they want, John, is they want to, they know like this dollar standard system is about done, and they want to kind of reside over the next system and still either maintain the amount of power they have or increase it. So it kind of goes with what Jim Rickards is saying, that like they want the SDR because they'll just use that as obviously individuals aren't going to be able to buy SDRs, but like the SDRs will be used instead of treasury bonds. So that'll be like the new liquidity pump for collateral in the system, how treasury bonds are now used as the majority of like collateral and hypothecation. They want to replace that with...
They can do that, Jason, but I mean, they can't support remotely as much debt as they've got already, and the only way you can keep this thing even afloat is even more debt. I just think we're coming to a crisis, and we'll see how they handle it.
Yeah, I mean, it's only there's no guarantee exactly what they're going to do during the next crisis. There's only like probabilities of what they could do. So that's why I think some diversification is important. Now, you and Eric Sprott and Rick Rule have had a lot of success buying winning stocks in bear markets and stock companies that outperform even when there's not necessarily a bull market in a lot of stocks. I know Eric Sprott has had success lately with Kirkland Lake Gold and also with Novo Resources, despite the paper bear market still basically in gold prices. How do you think you and Eric pick out winning stocks compared to a lot of other investors?
Well, I just think it's a matter of, knowing your field well and knowing what you're looking for. I mean, Eric's been extremely successful with Kirkland Lake because they uncovered a massive new, at depth at Fosterville in Australia, astounding grade. And I mean, there's an element, a lot of people don't understand that, but you got to really analyze these things and look for opportunities that aren't reflected in the price at that time. And even in a bear market, you can make money if the value of the company is changing dramatically because of their assets are improved. And it's easy to say, tough to do, but I mean, Rick Rule is extremely good at this too. I mean, he's a wonderful buyer at the bottom.
Yeah, Rickroll tends to do the private placements and get warrants on those, but a lot of our retail listeners don't necessarily have the capital for that. But I don't think you have a geology background, and yet you still have picked out a lot of winning stocks. Do you just ask geologists for opinions? Have you learned geology, or do you just mostly look at financial statements and management?
No, my brother's a geologist, and I understand geology, and basically, when my great success came, I could always judge people. I knew who I could trust and who I couldn't trust. And somebody you trust tells you something that sounds pretty promising. It generally works out pretty well.
Very good. I think there's a lot of opportunity in the gold and silver stocks, but it's also dangerous. There's also a lot of risks involved as well right now because, if the company, they have a bad balance sheet, management, goes all in and tries to build a mine. Like, look what happened with New Gold and Rainy River. They thought the mine was going to be economic at the current gold price. The costs exploded on that mine, and now it's not economic at all, and they're barely breaking even. So it's
well,
kind of...
Jason, I would recommend diversification to the average person who doesn't have access to really, good advice and information on single companies. I think you should probably buy a quality managed fund and diversify. Because you can get great returns. Like back when the gold market was good, when I was managing dedicated gold funds, I was up over 100% in less than a year, about 5 or 6 separate times. The money you can make in this sector when it goes is amazing. And the fact is, they have never offered a better opportunity at this very moment. Now, that doesn't mean they couldn't go a little bit lower in the short run, but when they go, the returns are going to be the best in history.
Yeah, I agree. The solution to the bear markets produce bull markets, I think, is that what Rick Roll says? I think I'm butchering his quote.
Yeah, but nevertheless, this is the big bear market. This thing, gold and silver and their shares are so far out of whack with everything else that when it turns around, it's going to be amazing, and nobody believes it. So that even makes it better because then they're all going to change their opinion, and that's more buying.
Yeah, and Sprott already, besides managed products, Sprott also has gold mining ETFs. So they have a regular SGDJ, I believe, and then a Sprott Gold Junior ETF as well.
We've got a lot of gold and silver product in our operation, and it's quality. It's run. The guys are good. I'm sort of off the day-to-day stuff because I'm old, but I sort of keep an eye on things, and I can tell you without that it's well managed.
I think that's interesting how, Sprott's been acquiring like the Central Gold Trust, and now they made an offer for the Central Fund of Canada because those were selling at pretty big discounts to net asset value.
Yep. Well, we're extremely committed to the sector, and we will remain, and we will do lots of financing in this. We are 100% committed to it, and I'm delighted to say that I think it's going to stand us in really good stead because it's one of the few things that I would feel confident investing in today.
Yeah, there's really not many bargains. The general stock market is one of the 4 most overvalued stock markets in history. If you removed, I think there's been, John, over $1.4 trillion in share buybacks with debt by the large cap publicly traded companies. Yeah. If you back those out since 2010, I think the PE ratio on the Dow would be like over 40 times earnings. So it would be just...
I know. It's a very dangerous period, and what we can never determine to the nth degree when it's going to change. But I know we're getting very close, and I think people can't be too careful at this point.
Well, John, I always enjoy talking to you, and I enjoy your insights on the gold and silver miners. If our listeners want to follow more of your work, how do they do so?
Just go to Sprott Inc. on the net, www.sprott Inc.
Thank you. And hopefully I can have you on again in the near future. I think, we're going to have higher gold and silver prices. I think 2 to 3 years tops, we're going to have $25 to $30 an ounce silver, $1,400, $1,500 gold. That's the absolute latest, because if it happens slower than that, I think the miners, there's going to be big supply problems, like you said.
Jason, I think you're thinking small. I think the gains in price are going to be much more dramatic than that.
I hope you're right. I still
Well,
have.
I would dare say that if they hadn't manipulated it, I think silver would be $50 and gold would be 3,000 now. So I think we got lots of room.
Yeah, I mean, I'm just getting fed up with seeing, all these articles saying, Bitcoin's worth a lot more than gold and I'm dumping all my gold. I mean, people should own both gold and Bitcoin, but there's so many people right now because of the Bitcoin market's flying right now that are dumping all their gold and silver and chasing Bitcoin. So I think it's
I bet you if you asked most of them, they wouldn't understand for a minute exactly what it is they're buying.
Yep. There's a lot of people who don't have computer science backgrounds who are buying it just because of the chart. Yeah, I would agree.
Absolutely. They're buying price momentum. That seems to be human nature.
Well, human nature to be speculators, right? People herd mentality, confirmation.
Absolutely.
Okay, great, John. Well, thank you for your time. I really appreciate it.
Yeah, any time, Jason. It's my pleasure.
Wall Street for Main Street needs your help. YouTube stole $7,200 from Wall Street for Main Street in annualized YouTube AdWords revenues, and they kneecapped our analytics down by more than 80% across the board since September 2016 with their new censorship algorithms to stop the rapid growth of our channel. That was money we could have used to upgrade our website, pay bills, and invest in improving our content and growing our business. Our audience of loyal listeners is all over the globe and so large now that if most or all of our listeners were to commit to donating $1 to $5 each month to our Patreon account, we could easily meet our goal on Patreon. Wall Street for Main Street also accepts one-time donations on our main wallstreetformainstreet.com website. That's WALLSTFORMAINST.com website via PayPal, Gold Money, or Bitcoin. We also accept donations of physical precious metals that can be mailed to us. Thanks to all listeners who have already made a donation, and thanks in advance to any listeners who make a future donation or contribution to the growth, improvement, and success of Wall Street for Main Street.